So first of all, just to give a context, we will be discussing from AAOIFI Shariah standards point of view, the Musharaka and the Mudaraba standards particularly, and also a glimpse of Wakala standard. These standards basically discuss the equity or investment-based contracts. Once we go with the principles first I will try to lay out the principles. I will also try to use the Excel sheet, etc., to demonstrate how the profit calculations, distributions, this work. And after that, we will discuss some contemporary applications. I'm more application driven, so I really want to see how it can be applied instead of just discussing the theories. So we'll try to discuss some modern applications, and we will see how this can, be applied in your case. So maybe you are managing a fund, maybe you are managing a company, maybe you are thinking of designing a sukuk, or maybe you are trying to go for a VC fund, whatever. So we will see how the different applications may work. So before I start, this is a brief background of myself. I hold a CSAA, Certified Shariah Advisor and Auditor fellowship from AAOIFI, and I'm a master trainer with AAOIFI as well, alhamdulillah. I did my PhD as well as MSc in Islamic finance from NACIF University, Malaysia. NACIF University is one of the most renowned Islamic finance university in the world, set up by the Central Bank of Malaysia. And I am the co-founder of Adal Advisory Azdian Berhad, a share advisory company based in Malaysia, and also IFA Consultancy, another share advisory company in Bangladesh. And we also have a dedicated Center for Islamic Economics Studies. This is basically an IFTA program, a Takhassus fil Fiqh wal Fatwa, for ulama who study here for 2 years, and they study fiqh for classical fiqh with Islamic economics, literature, and modern applications in Islamic banking, capital market, takaful, insurance, etc. So this is a very rare combination, which I only saw a parallel in Jamiatul Rashid in Pakistan. I never saw that until now in any other parts of the world, but alhamdulillah, we started that. This is 5th year. And the alumni who are graduating from these madrasas, mashallah, they're doing tremendous work in many institutions. All right, so this is in brief my training portfolio. Why I put this, so that you have a context, so that we can interact it based on it, and we can discuss many different aspects. So if you can see my portfolio, alhamdulillah, it starts from the AAOIFI. I have been regularly invited by AAOIFI to provide the capacity building programs in Bahrain, not only in Bahrain, but also in different high-level assignments. For example, I was assigned to train ISDB, top-level legal delegates, the Ministry of Finance in Republic of Indonesia, Central Bank of Yemen, as well as the Ministry of Finance in Afghanistan. So these were the engagements through AAOIFI. Other than AAOIFI, I was also being invited by NACIF University. SIDC is the training wing of Securities Commission Malaysia. BIBF, the Bahrain Institute of Banking and Finance, it is the training wing of Central Bank of Bahrain. BIBM, the training wing of Central Bank of Bangladesh. This is Bangladesh Bank, the Central Bank of Bangladesh. USIM, where I'm a part-time lecturer in University of Sciences of Malaysia, UNIMAI as well. These are banks, commercial banks in Bangladesh. Shahjal Islami Bank, one of the biggest Islamic banks. Maybank, the largest bank in Malaysia. Citibank, also in Bangladesh. This is the madrasa where I graduated from, Jamia Shariah Malibak. This is Darul Uloom New York. Last year I was here for training the students, and inshallah tomorrow I will be traveling again to New York for a 3 days training program for Darul Uloom students. And you can also see the training wing of the Bangladesh Securities Commission, BICM, and TAI from Dubai. And SIBAFI is a very renowned institution globally, General Council for Islamic Banks and Finance, based in Bahrain as well. This is also a university where I was a part-time lecturer. I just mentioned this during the last session that I was teaching Zakat course just last semester. And this is IUT, OIC University in Bangladesh. So you can see the when it comes to training, as well as I didn't bring the advisory portfolio, so I have alhamdulillah had the opportunity to cut across the formal financial institutions like Islamic banks, full-fledged windows, subsidiaries, Then in Islamic capital markets, so funds, sukuk, crowdfunding, equity crowdfunding, P2P crowdfunding, then robo-advisory, the blockchain-based solutions, takaful tech, then what else? Blockchain, and I think most of these I already mentioned, and also some other different segments as well. So inshallah, with this, when I go with the training, if you come from any type of Islamic financial segments or anything that comes to your mind, I think please feel free, and I will try to share my experience, inshallah, from the different parts of the world. So again, the context today is, first, I would go through the basic equity-based contracts, the main principles. I will not go to the detailed theories, as I mentioned. I try to make it very applicable, and then we'll just jump into the modern applications. All right, first and foremost, just a quick glance. You see, today, when we talk about Islamic finance, one of the most important characteristics we want to highlight is that it's risk sharing, right? It's not transfer of risk, it's rather sharing of risk. And this risk sharing actually gets applied through the musharaka, mudaraba types of partnership-based contracts. When we talk about Islamic finance, but then we just resort to debt-based finance, I'm not blaming the Sharia-compliant debt-based contracts, but that does not realize the risk-sharing beauty of Islamic finance. If we want to really have true risk sharing in the economy and in the financial system, then we have to start with mudaraba, musharaka, wakala, these principles. So why risk sharing? Because this actually disciplines the market as well, brings greater stability and efficiency. When we talk about Islamic finance, but we still do debt-based finances, debt-based borrowing, etc., we don't see the differences. And that's why one of the main questions often we hear, what is the difference between Islamic finance and conventional finance? And that's because we still utilize a lot of debt-based financing. So with these types of equity-based financing, we have greater stability and efficiency as well. Of course, connection to the real economy. We cannot think of musharaka or mudaraba or equity-based contracts without linking it with the real economy, right? And it also discourages speculation, short selling, and these type of things where we don't have to own the asset, we don't have to take the risk of any businesses, etc. So that means that it discourages the speculation. And when you eliminate the speculation, you actually eliminate the problems of the modern financial system driven by capitalistic mindset. And of course, with that, we also get socio-economic justice. We can also do funding growth capacity and improved resource allocation as well. All right, now let's start with the basics of sharika and musharaka, the partnerships and modern corporations. Very basic, what we mean by shirka or sharika or partnership is basically an agreement between two or more parties to combine the assets, combine labor, or combine liabilities for the sole purpose of making profit. So in a partnership contract, the subject matter is profit. For example, in a sale contract, we call ma'qud alayh, or subject matter. What is the subject matter in a sale contract? The sold commodity, mabi'a. So that's why we have to define it. We have to make sure there is no gharar. We have to make sure its quantity, quality, everything is defined. In contrast, in a musharaka or mudaraba contract, the subject matter itself is profit. So we have to make sure the profit mechanism, the sharing of the profit mechanism is clear, is transparent, is well agreed upon, it's written, and so on and so forth. Because the subject matter is the profit. In any contract, if the subject matter is not defined, if it is not specified, then we have gharar, we have uncertainty. And when the gharar becomes major gharar, this makes the contract voidable, fasid. So that's why it's very important. And we will, in this session, we will also see the different mechanisms of profit sharing, inshallah. So classically, we had different types of partnership. I don't want to go into very details, but on the broad level, we had partnership through funds, like two or more people will give their funds. We had partnership through vocation, labor. Two or more people will say we work together, we make profit, and we share the profit, right? And we also had shirkatul wujuh, which is not even work. We will use our face value to generate revenue. How? Because I'm renowned to the community, people will give products to me on debt. When we sell it, we make profit. We return the debt and distribute the profit. So that is shirkatul wujuh. What we get from this slide is that traditionally we had innovative structures of partnerships. It was not only based on funds or amwal. It was based on labor. It was based on face value, or this wujuh is also interpreted as liability. Meaning that if partners take liability, based on the liability, they have an eligibility to receive profit. Now, in the modern sense, if we look at how a generic sharika or musharaka, so this we have several synonym terms. We have shirka, sharika, musharaka, all denotes the same thing. It means partnership. So let's see a very typical partnership between a bank and a customer, right? So you see here we have the customer, we have the bank. Or you can think of this is a partner A, this is partner B. It makes the same sense. Now both parties enter into a musharaka. Let's say they say the bank or the partner A, they contribute, let's say $30,000, and the customer, or let's say the partner B, contributes $70,000. So with that, they have a capital contribution ratio of 70 and 30. Is my voice audible at the end, or should I use a microphone? Okay, I didn't want to bother your ears. I know you are all tired.
Close the door.
Okay, okay. I can go and volunteer. No? But let me just show you if you feel that the microphone is better. Is it better now if I use the microphone? Which one do you prefer?
Without is fine as well.
All right, khalas. Because we don't have many people, so we can just, all right. So back to the scenario that I was trying to give. So we have two partners, forget customer and bank. Let's say partner A, partner B. So partner A puts $30,000 and partner B puts $70,000. 70 plus 30, 100. So in a $100,000 capital, the ratio of partner A is 30% and ratio of partner B is 70%. First question in profit sharing. So firstly, we have to specify the profit sharing ratio, PSR. As I mentioned, in musharaka and mudaraba, profit is the subject matter. If you don't define it, if you keep it uncertain, if you think, oh, we are friends, we don't need to discuss about it, then it becomes a point of dispute later on. And it makes the act voidable, facet. I have encountered many cases as a company, as an individual, where they started family business or friends and friends before they graduated, they started the business. They thought we will discuss about profit later on. They felt ashamed to discuss about profit. And later on, they got into disputes. And they didn't have any written agreement, just WhatsApp messages, conversations, sometimes nothing. Anyway, so I'm trying to put things into context that let's say they have put 30% and 70%. Now, can they agree? First of all, what are the different types of profit sharing ratio they can agree? Firstly, they can agree as per the capital contribution ratio. They can say, okay, since you put 30% of capital, you get 30% of profit. What is profit, by the way? Profit is revenue minus expenses. That's how we define profit in Sharia. Very simple. In accounting terms, you have gross profit, net profit, profit before tax, profit after tax. So you can say that all the way after all the expenses, the end, what is remaining is the profit that we mean. So in other words, the net profit is the profit that we mean here. So we can say that you get profit as per the capital sharing ratio, meaning 30% profit, 70% profit. That is one way, no issue. We can agree on that. We can also say that since, let's say in this case, the bank or the partner A, he will be working, he will be a working partner. He will be a partner who does not only provide funds, but he will also contribute through his labor, through his intellect. Maybe he's the software engineer. He will do the coding, let's say, right? So we can say, oh, since you are putting extra efforts, let's agree that you will have 20% extra profit sharing ratio. So that means that you get 50 instead of 30, and the remaining 50 belongs to the other partner who just puts the funds. This is also Sharia compliant. Why? Because he is getting 30% because of his 30% of funds. And the extra 20% he is getting because of his labor or intellect or the extra effort that he's making. So that is also Sharia compliant. Now loss is always based on capital contribution ratio or the investment ratio. Meaning that, let's say after 1 year, in this $100,000 venture, after 1 year, let's say there is a $10,000 profit. So we will have to distribute it based on this PSR, profit sharing ratio, which is 50-50, meaning each party gets $5,000. But if there is a loss of $10,000, we cannot agree on LSR. There is nothing called LSR, that loss sharing ratio. There is nothing called that. We cannot agree on a loss sharing ratio. It's by default the capital contribution ratio or the investment ratio. Meaning that if there is a $10,000 loss, then the loss would be attributed $3,000 to the partner A because he put 30% of the capital, and $7,000 to partner B because he put $70% of the capital. Are we aligned here on that? The PSR we can agree, we must agree. If we don't agree on the PSR, that makes the contract voidable. So it's very, very crucial. But there is nothing called LSR, loss sharing ratio, because loss will always be attributed to the capital contribution ratio. Yes?
Can we ask questions?
Yes. I just shared the first part of the basics, and now let's make it engaging. Yeah.
So, two questions that are related. What is this dynamic? So, a real-world situation is two parties initially agree on something based on some assumptions, but then after that, things change. So whether it's contributions, time, money, whatever the case is. So the assumptions that were established in the initial agreement, those assumptions get devalidated. So how do you dynamically adjust this PSR? Let's start there.
All right, very good question. So let me straightly go to that slide first. So while I keep that slide open, I will not be reading that slide. You can read, but I will explain the scenario. So we can have dynamic PSR through different ways. For example, we can say year 1, we have 50-50. Year 2, we have 60-40. Year 3, we have 70-30. That's fine. We can have profit cap. Profit cap means, so let's say 50-50, 50%, 50% for each partner. But the 50% of the capital provider is capped up to 10% ROI. What it means? It means, let's say I gave the example of $10,000, remember, right? Sorry, $100,000. 70-30, I said $100,000 is the total capital. So after 1 year, they have a profit of, let's say, $20,000, okay? Now, if you divide 20,000 into 50-50, each partner gets $10,000. If you divide it as 70-30, then the person who gave 70%, I think he will get around 14,000 something, right? So we are saying, no, your profit is 50%, but capped until 10% ROI. 10% of 100,000 is $10,000. Meaning that even though you are eligible to get 14,000, but your profit is capped until 10,000, the rest 4,000 goes to the other partner to incentivize him, to motivate him so that he can even drive more to make the venture more profitable. Do you get this? Let me rephrase.
Let me add an addendum to that.
Okay.
Who determines that?
Parties.
But if they have two people and there's disagreements about, well, I contribute.
So now to this question. So these are the ones I mentioned is when you start the venture or when you initially agree. Once you agree on something, it's locked until and unless both parties mutually agree to change it. Let me rephrase it. Once we agreed that it's 50%, 50%, right? We start the venture and everything. And then suddenly after 1 year, we say, no, the circumstances change. Now I'm going to give you 40%. No, it doesn't work. Because this will lead to dispute. And Sharia is very, very particular in mu'amalat about disputes. That's why Al-Quran says, Allah subhanahu wa ta'ala in Al-Quran says, إِلَّا أَن تَكُونَ تِجَارَةً عَنْ تَرَاضٍ مِّنْكُمْ. وَلَا تَأْكُلُوا أَمْوَالَكُمْ بَيْنَكُمْ بِالْبَاطِلِ. Do not consume each other's wealth unjustly. إِلَّا أَن تَكُونَ تِجَارَةً عَنْ تَرَاضٍ مِنْكُمْ. Except in the way of trade by mutual satisfaction or consent, taradi. So the taradi is very important. Once the PSR is a subject matter I mentioned, right? So once we have the ijab and qabul, offer and acceptance is sealed. Now you cannot unilaterally change it. If you want to change it, you have to change it through mutual agreement. That's the point I'm trying to make. Even if circumstances change. So of course, you can always have the negotiations on table between the partners. Let's see, we agreed on this, but now circumstances change. Can we agree on this? But if they don't agree, then we cannot. We have either of the two choices. Either we walk the same path, meaning based on the pre-agreed ratio, or we say we want to mutually terminate. But you cannot unilaterally switch, the ratios, because that will lead to disputes, and Sharia doesn't like that. Yes, Prof.
I'll add one thing. I think it's very important to mention what type of profit. You mentioned certain numeric expenses, but sometimes there might be dispute within which expense to include. For instance, let's say the part I, part B, for example, the customer.
Right.
For instance, we get some cases where he will pay himself a very lavish
Travels, etc. Right.
sorry.
Travels, hotels. Yeah.
Even salary.
Right.
Normally it's $10,000. He will put $50,000.
Right.
For that.
Mm-hmm.
So just mentioning or the detail of the profit, Allah, it's going to be better for
Very, very good question.
gross profit operating. If it's gross, which things to include, so on and so forth.
Very good question. Actually, when we talk about expenses, we mean direct expenses. Direct expenses mean expenses that are paid to third party related to the business or related to the venture. Now, the question related to what Professor mentioned is, let's say the expenses borne by the working partner himself, right? Let's say for his transportation, travel, etc., etc. Now, first and foremost, let's talk about salaries. Can a working partner get salaries or not? So traditionally in Musharaka Mudaraba, we don't see any concept of salaries. Why? Because this salary is tantamount to a fixed profit that we are already paying him, and because of which there could be a scenario that the other partner is deprived from profit. Let's say we say the salary is $10,000 and the net profit is $8,000 or just $10,000. What it means is that we give all the profit to him and the other partner is completely deprived of profit. The principle AAOIFI mentions is that we can have dynamic profit sharing mechanism, but we have to be mindful that there cannot be any such mechanism which has a potentiality to deprive other party completely from profit. So with that, salaries, usually what it may lead to is the other party may be completely deprived of profit. So that was the traditional position. Now today, AAOIFI mentions that, okay, we understand the context has changed. We understand that after establishing a company, maybe as a CEO, he receives salaries. And that's the urf, that's the custom today. So if that's the case, then we have to pay him salary through a separate employment contract. And he will be, what we mean by separate, that if he is no longer an employee, he still remains the shareholder. If he is no longer a shareholder, he still remains an employee. These are not linked, number one. Secondly, because it's an employment contract, it will have terms and conditions just like any other employee. He will have certain obligations to perform, maybe certain working hours, certain et cetera, because of which he is getting paid a salary. So this is number one, very important, to consider this as an expense from the venture. Number two, in Mudaraba and Musharaka, in all equity-based contract, even in Wakala, the working partner has a capacity of Amin. Amin means trustee, okay? He cannot do expenditures which generally goes against the favor of the venture or the Musharaka. Based on this principle, scholars have mentioned he cannot even take any extra amount than very basic transportation. Let's say if somewhere he can go by car, he cannot take a flight unless it is approved by the other partner. So all these leverage expenses that you mentioned will be automatically dismissed. So based on our experience, what we say previously, it was the tradition that in Mudaraba Musharaka they would just keep it simple. But today we mentioned that you agree on the heads of the expenses as well, right in the agreement. Because this is an important area of dispute as well, as you mentioned, because if you increase the expense, the net profit becomes low, right? So through that, we can have a scenario that the other partner, the shareholder, the investor is being deprived. Same case for fund managers, for example, or different types of equity-based contracts. Everywhere there is an agency issue, someone managing the venture, etc. We have to be very transparent about the expenses, because otherwise it may ruin up the profits, which is the right of the other partners as well. Does that answer your question as well? You're trying to digest it? Okay.
On a related question, if you can go back to that slide.
Yes. This one, right.
So nominally, that's straightforward, easy to understand. What about relative? Does that even apply? So hypothetically, with the two people that are contributing cash, if one is a millionaire and one is a billionaire, it's a different relative basis, right? To them, impact on them, even if the actual dollars are the same. So what is the perspective there? All that matters is nominal?
We will only look into the capital that they are contributing.
Right, regardless of what they're...
Regardless of their background, they're millionaire or billionaire, etc. Now, yes, they may have an impact on negotiating the profit sharing ratio. So in this case, if this is partner A, who is the working partner, we can give him profit sharing ratio more than his capital contribution ratio. Just like I just explained, let's say he contributed 30% of capital, we can still give him 50%. What is the justification? The 30% is in exchange of his 30% capital. Additional 20% is in exchange of his work. In Sharia, everything must be based on commutative, because it's a commutative contract. Now, for this sleeping partner, we cannot give him more than his capital contribution ratio because he's a sleeping partner. But within his capital contribution ratio, we can agree and adjust. So let's say in your case, if you have a billionaire, maybe you give him, let's say he contributed 30%, but you give him 20%. The other guy who is a millionaire, you want to give him a bit less, you can adjust him to 15%. So you can play within that cap, the capital ratio cap. But I think that's the most you can do. But otherwise, everyone has the equal treatment as a capital provider.
So on the other side, the bottom one, profit distribution.
Right.
So hypothetically, this again, real world situation. If you have two parties, inevitably one person will have more impact on the bottom line number than the other. But it affects both of them.
Right.
So how do you go about doing that?
You agree, so you take all the perspectives here.
So it goes back to that regardless of influence.
Exactly. So whatever you are thinking that, okay, I will have more impact, I will have more time and effort, more energy, etc. Yeah. So all of these considerations will play here to determine the initial PSR. Once we agree on the PSR, it's locked until and unless it is mutually agreed. Now, I want to give one more perspective. So this is the traditional musharaka, right? Where we don't have stocks, we don't have shares, we don't have company. I'm not talking about companies. But today, when we set up a company, we start with a number of stocks or number of shares. Let's say in this case, instead of saying 30 or 70, maybe we issue 1,000 stocks, okay? And we say to this partner that because you are, even though you are giving, let's say, only $30,000 out of $100,000, but you are going to provide your intellect and efforts and time. So let's give you 500 stocks out of the 1,000 stocks, right? And the other party also gets 500 stocks. Meaning, in terms of stocks, in terms of shares or equity, they have agreed to get an equal number of stocks. So in that scenario, the moment the stocks are allocated, profit and loss all will follow the stocks. You have 500 stocks, your profit is limited up to 500 stocks, meaning that if, let's say, there is a dividend of $1,000, what it means, one share gets $1 dividend. You have 500 shares, you get $500 dividends. So in a stock company scenario, it will automatically follow the number of stocks you own in terms of dividends, in terms of even losses. But when there is no equity, when there is no stocks, but we call it non-equity partnership. So there is no equity, but there is still a partnership. In traditional partnership, as well as today, like in Malaysia, we have LLP, Limited Liability Partnership, where you don't have equities. We just put funds, 2 or more parties, and it is registered as a partnership, but there is no stocks issued, no shares issued. So for that case, this will apply. It will be fluid based on the capital ratio. But if the stock is already given, then you always go with the fundamentals of the stocks. So the owner of a stock gets profit according to the number of stocks they own. He shares the liability up to the number of stocks that they own. It will follow that structure. Yeah. Any further question on this? Yes.
Can you base the profit off of performance? Let's say it's 2 salespeople, they're owners of a company.
Right.
And let's say one of the owners, they are able to get 100,000 in revenue, the other person is able to get 50,000 in revenue. Are they able to, as years change, maybe this one gets 100, this one gets 50 in the second year, are they able to base their profits based off of the percentage that they're bringing? Or does it have to be based on 50-50 what they agree?
So what I understand from your question is that 2%, let's say they are both from sales background, like they are basically selling something and making revenue and share the so the source of profit is basically the revenues that they make by selling something, right? So in that case, they must have agreed upon a profit sharing ratio from the beginning, right? So once they agree on that profit sharing ratio, anything that they sell, even if somebody sells higher, somebody sells lower, still it will follow the same profit sharing ratio. Unless and until they agree otherwise, mutually, as I already explained. They can say, okay, if I sell or somebody sell, then a particular percentage of that sales may be considered his commission as an expense, and the rest is distributed. Fine, we can also do that. Just like we have an employment, earlier I mentioned, we give him a certain salary and then distribute the rest. So here we give him certain commission and we consider the rest as profit and divide the profit. But whenever we consider it profit, it must follow the profit sharing ratio. That's the point I'm trying to make. We cannot say that, okay, I will receive 100% profit from this sale, you will receive 100% profit from this sale. We cannot say that. So traditionally, the fuqaha have gave the example. Let's say we cannot say that, okay, I will get the harvest of this land, you will get the harvest of this land. We cannot, because maybe there is only harvest from one land. So other party may be deprived of profit. So that's why whenever it comes to profit sharing ratio or distribution of profit, it must be from all the sources of profits combined and strictly following the profit sharing ratio that is pre-agreed. Remember, it must be agreed during the agreement or after the agreement before the profit realization. If you wait until profit realization or until there is a profit, in most cases it will lead to dispute. So that's why Sharia strictly, Fuqaha has strictly mentioned it must be agreed upon during the agreement or at least after agreement immediately before there is any profit to distribute. Yes?
So if we go to the example of 30-70 and you said maybe the partner that's 30, they have the knowledge and intellect and they go up to 50 and then the other partner gets 50. Now let's say, for example, coding, right? The partner that originally, so the partner A with 30 and then 50, they have stopped doing their duties. They still give 30% of capital, but they don't do the coding, and then partner B takes it on themselves, and then they realize I'm doing all the stuff that I'm paying that 50% for. And partner A doesn't want to come to an agreement. Is the only way to solve it just local laws and arbitrage, or how do you go about that?
That's the only way. Because we have, I received a case just, I think, last week, or just a couple of weeks back. There was an issue exactly like that. So they were, before they graduated, two friends, they started a venture. And at that time, they didn't think much about it because they were very good friends, the roommates, etc. They just started. And they agreed that one of the friends, he will do the coding, he will be on the ground at the shop, at the office, etc. And the other friend will be working remotely. That's how they agreed. But then it ended up that after 1 year or so, that friend, he doesn't come to the office. He doesn't do the jobs that he was supposed to do. And in fact, most of the things the other friend has to do, right? So how they deal with this? So the proposal they had is that he wanted to unilaterally alter the profit sharing ratio. So I said, cannot. Either you proceed with that, or you sit down, you have the hard talks, you negotiate, either between yourselves or through a mediator, whatever works. But definitely you have to mutually agree. If you don't like, you just terminate. You say, I cannot continue. That's another way. But once it is agreed, it is sealed. So that's why it's very, very important to choose the right partner. And the features of a right partner is demonstrated in Quran, where the daughters of the story of Musa alayhi salam, the daughters of
Ask the wrong person. I don't know.
Shu'aib alayhi salam. Yes. Now, subhanallah, it's the end of the day. So that's why my brain is draining. So the daughters of Shu'aib alayhi salam described Musa alayhi salam as what? Inna khayra man ista'jarta al-qawiyyul amin. Basically, they were saying, if you want to employ someone, the best people to employ is the one who is qawi and amin. In other words, they are indicating Musa as qawi and amin alayhi salam. Qawi means strong physically, mentally, psychologically, intellectually. And amin means the person of integrity, trustworthy. Right? So these are the two characteristics we need to find in the partner that we choose. And also, even it's hard actually to negotiate all those things in the beginning. But believe me, we have seen so many failures, we have seen so many disputes, that hard talk in the beginning is very important. So negotiate and discuss and negotiate the profit sharing ratio, discuss what will happen if things go wrong, what will happen if disputes arise, how you will mutually agree on something. All these important aspects should be discussed and agreed upon in details. Yeah. Yes.
So termination, what distribution would a termination follow? Would it go 50-50 or would it go for the original 70-30?
Okay, good question. In a musharaka or mudaraba, right? Let's not if it's equity based or stocks, I already mentioned everything will follow the number of stocks you own. If you own 50% stocks, once it is liquidated, 50% of the remaining assets will go to your ownership. So it's very straightforward. If it's a non-equity ownership, so here we have two different ratios. We have profit sharing ratio, we have capital contribution ratio. So when we have a liquidation, termination, we agree to terminate, we are selling out the assets, or maybe one of the partners, he will say, I will buy everything, right? In other words, you are basically getting cash, or maybe the remainder of the assets are being sold to someone else. Now, in that case, it will strictly follow the capital contribution ratio, because capital contribution ratio is the ownership ratio. Once it is liquidated, we no longer talk about profits. Now everything is like an asset of the venture, and you distribute it according to the ownership ratio, and the ownership ratio is the capital ratio. Yeah. Yes, you wanted to ask something, brother?
Yeah, I have so many questions. I don't want to take up further time.
No, yeah, why not? I mean, the principles are more or less known. I really wanted to have more applications, from practical aspect. And I know you have, yeah.
Aspects. So
Yes.
Again, if there's a dissolution because two parties can't come to an agreement,
Right.
there's no resolution.
Right.
That's not real world, because if that entity has customers and so forth, you can't just leave them stranded. So then what happens? Then from an Islamic perspective, you can't hurt your customers.
True.
Right. So
True.
That's complicated. That's one question. The other question is, this is real world. People change. You say, from a partnership perspective, okay, find someone with integrity. Okay, well, respectfully, someone who's 50 is not going to change their integrity as much as someone who's 25, hypothetically speaking. So if those two people become partners, based on their integrity at that time, 5 years later, 10 years later, is going to be different. So how do you deal with these things?
Yeah, I mean, these things have been discussed by the scholars, so I will share the insight. The first one, which is basically about the dissolution, right? How we ensure there is a business continuity. That's what you asked, right?
Yeah.
So basically, in today's world, if you look at the legal contracts, previously it was always going to the court to have remedy from the court, etc. And that's a long journey, and it ends up into nothing. So today they will always put arbitration clauses. There are in Sharia we call it tahkim, like sulh and tahkim. With that, sulh is basically the two parties just come and then they agree on something. Arbitration is there is a arbitrator in between, and they follow the judgment of the arbitrator, and they enforce on themselves. So today in every Islamic finance legal agreements, top legal agreements, either it's banking or capital market, we put arbitration clause, so that at least there is a mediator who can bring a solution into it. Because as you mentioned, for example, there are issues, there are rights and obligations to customers, to stakeholders, etc. So we cannot just wind down the company because of a conflict between two parties. So the arbitrator will take all these considerations and he will try to come up with a solution. But again, my point here is we cannot unilaterally change things, particularly related to profit sharing ratio once it is locked. That's why now what is the solution? First, number one, at the very beginning, sit down, brainstorm. If you cannot brainstorm, use AI. Ask AI to do the brainstorming for you. Seriously, it works. You ask it that, you tell it that, imagine you are the worst partner, and tell me what are the issues you will have in 2 years' time. So it will give up all the list of things. And then you say, okay, what are the possible remedies? And then based on that, put things, into perspective. Because things will definitely happen in 1 or 2 years' time, or 3 years, 5 years' time. So why not we have a solution right now, other than waiting for that time and then putting us in the problems. And this is based on Quranic verse as well. The longest verse of Al-Quran in Surah Al-Baqarah, it says that we should write the agreements. إِذَا تَدَايَنْتُمْ, right? بِدَيْنٍ فَاكْتُبُوهُ. When you deal with debt. Now debt, Allah mentioned dain, but if we look at the underlying meaning, it's basically an obligation, liability. And how I interpret it is, as many scholars as well, it's basically a contract which includes a long-term obligation. So that means our musharaka as well, our mudaraba as well, because you have an obligation to pay profit, to do this and that. So Allah is saying, write it, faktubuhu. وَلْيَكْتُبْ بَيْنَكُمْ كَاتِبٌ بِالْعَدْلِ. And it should be written by a adil, a just writer, not a lawyer, someone who will put all the risk to one partner, as usually the lawyers will do. If you pay him, and he will put all the risk on the other parties. Allah is saying, no, it should be written by a just lawyer, كَاتِبٌ بِالْعَدْلِ. The reason is, later on you should not be falling into disputes and damage the brotherhood. Yes, brother.
Is it common practice to revise the PSR or put in the contract that we will revise it after 1 year, 2 years? Or is it just you've said it and then if y'all both agree to come sit down to do it?
So usually, unfortunately, we don't see this structure into practice much. We see musharaka in the equity contracts, which I already mentioned. There you don't talk about PSR because it will always follow the stocks. The number of stocks you have, based on that, dividends, etc. will follow. This structure, a similar structure is used by the Islamic banks in the deposit side. Okay. So on the deposit side, usually what they will do, we don't have musharaka, we have mudaraba. Mudaraba, the core difference between the two is, in musharaka you have both parties putting their funds. In mudaraba you will see one party putting the fund and the other party managing it. Meaning in that case, let's say a customer may be called Rabbul Mal, or the owner of the funds, and the bank will act as a mudarib, or the manager of the fund. Now, in that case, usually what I have seen, let's say in the context of Bangladesh and Pakistan, they will have a profit sharing ratio fixed. let's say 65%, 35%. So 65% for the Rabbul Mal, for the customer, and 35% for the bank. But within that 65-35, they have some internal adjustments through profit cap, as I mentioned earlier, ceiling, this and that. So that will vary. So the main PSR still remains the same, but then within the PSR, the ROI, ceiling, etc., will become lower or higher. And they also call it a weighted system. So meaning that they will give certain classes of investors a high weightage, maybe because it's a long-term, fixed deposit. Some other depositors, like current account depositors, they will be given a bit lower weightage. So within that 65%, they will have a bit of variance in the profits. That the banks will do, and usually Sharia scholars approve that with the condition that it must be properly communicated. So it must be on the website, it must be in the SMS, in the email, so usually every quarter or every year they will change that numbers. Yes.
Is there a case on the standards of a UFI where it started with banking as a customer, then another customer will join? So let's say the case of GPLP, we have maybe one LP, then the second one, a third one. Is there any standards that will look at the PSR, for instance, how we can do the profit sharing? Because it's not fair to use the same profit sharing.
Right.
Because this one is joined already after, you already took the risk. Now the project, let's say, real estate is growing. Okay, it's gaining traction. So now people would like to invest. It shouldn't be the same.
Right.
So how do standards deal with that?
Yeah, very good question. So in AAOIFI, there is a standard on Mudaraba, there is a standard on Musharaka, there is also a standard on profit distribution pool or something like that, or profit distribution mechanism. I will try to pull this standard later on, inshallah. There is a separate standard where it gives a context on how you distribute the profits. Now, in the Islamic bank's case, this is a venture capital case where you have several LPs. I think this is somewhat closer to what you have asked. So in Islamic bank's case, let's say from the Rabbul Mal side, there are thousands of, maybe if it is Bangladesh, Pakistan, you have millions of depositors, right? So usually how they deal, they have the umbrella PSR of 65-35, as I mentioned. So 65% for the entire depositors, 35% for the bank. Now, within this entire umbrella of depositors, how do you distribute? Some people, they came for a current account. Usually, current account is not based on Mudaraba. Let's say savings account, but still they have a feature of withdrawal whenever they want. Some would have monthly deposit. So let's say they will deposit 1,000 taka every month. Some will have fixed deposit. They will put 1 lakh yani 100,000, 200,000. And they will keep it for, let's say, 6 months, 12 months, etc. So for this problem to solve, AAOIFI standard, and before AAOIFI standard, there is also a resolution by International Islamic Fiqh Academy. They call it a scoring method. A scoring method means they will give points to, or units, points to the amount as well as the time, period. So let's say somebody has put $1,000 for 3 days. So if we call 1,000 as 1 unit, so he has a point of 3. 3 days, let's say 1 day equal to 1, and 1,000 equal to 1. So 3 days times 1 is equal to 3. He has a point of 3. Another person put $10,000 for 1 day. So his point is 10. Because he got 10 units of 1,000, but in terms of period is just 1. Now, once we have the profit, we will total up the total points. So 10 plus 3, 13. So the profit will be distributed to these 13 points. Whatever the profit, 1,000, whatever, will be divided by 13, and each will get according to his units. So this may not be the most perfect way to distribute, but that's the closest way of, just distribution that the scholars have come up with, and that's how it is being utilized by the Islamic banks. And not only Islamic banks, today in the context of crowdfunding, in the context of other different types of products where you have a lot of investors on the other side, but you want to maintain one single profit sharing ratio with all of them, you have a pool of investors. So usually this scoring method is what works best. So just taking into that, I will not go to the very principles. I think we already spent quite some time, so I will go to some applications. So you see these equity contracts, the musharaka that we talked, and I mentioned the mudaraba is basically almost the same thing. It's just in mudaraba, one party gives the capital, the other party manages the capital. And there are a few other principles I wanted to go through very quickly. So who is going to put the what type of capital we can provide? Capital can be in cash, capital can be in kind as well. If it is in kind, then it must be valued and converted into a cash amount. For example, one party says, I will give $10,000. Another party says, I will give my machine, let's say whatever machine he has. Now we want to value that, we have to value that machine and record it as the same currency. Let's say we have $10,000 cash from one person, we will say $2,000 from the other person, but that $2,000 is actually a machine or something. Why we need to convert it and value it into same currency? Because without that, we cannot determine the capital sharing ratio. And if we cannot determine the capital sharing ratio, we will have problems if there is a liquidation, if there is a loss. Because the person who gave the machine, he will say, this is my machine, I will just take it out, khalas. And all other loss is attributed to the other party. They will have a dispute. So to make sure there is no, as I mentioned again, Sharia in entire fiqh mu'amalat, with all these riba, gharar, all these prohibitions and eliminations, tries to achieve a way that is just and fair. And there is no munaza'a, there is no dispute between the parties. So we need to agree on that value of the in-kind capital. Profit and loss, I think I already mentioned most of the principles that must be agreed upon. Loss of capital must be borne by the Rabbul Mal. It is in Mudaraba. In Musharaka, we will say that loss of, you will see here the loss will be basically based on the capital contribution ratio. Profit may be distributed based on actual or constructive liquidation. What it means is that traditionally in Musharaka and Mudaraba, how do you determine profit? Usually they would close the business, they would sell everything, and then they know how much profit we have. But today we have business continuity, right? We have companies that are operating, like Coca-Cola company operating more than 400 years. So how do we deal with that? Is now we do constructive liquidation, meaning that at the end of the year, through accounting principles, now we have some sort of valuation of the assets in hold. We have some valuation of the inventories, etc. So we take these into perspective, and based on that, we determine how much profit is that, and that profit we will distribute. So that is known as constructive liquidation. Yes, sister.
So title company.
Yeah.
Right, they're the ones that will hold all the funds and then distribute fairly. Like that's what you're kind of like. How do you know what will be distributed? Because the title companies will do that.
Who was the title company? Sorry.
So I don't know if this applies to, like, for example, real estate.
Okay.
Like you have an escrow where you hold, the buyer's funds, the seller's.
Oh, okay. Okay.
Everything's held by like a title company.
Okay.
And then distributed at the end.
All right. Yeah, that's a good way. I mean, but the escrow thing comes after liquidation. So first step is how to ensure that there is a profit. To ensure there is a profit, we need some sort of liquidation. Liquidation means we sell the inventories, we sell the assets, and we know if the capital is retained. If the capital is retained, but there is a surplus, that surplus means profit. That's how we traditionally understand profit. Of course, after deducting the taxes, expenses. But the point I was trying to make is that today there is no actual liquidation usually until the dissolution of the company. If the company is running, at the end of the year, we have audit, financial audit. In the financial audit, we already have a valuation of the inventories that are not sold yet, of the fixed assets and everything, through which we can determine if there is a profit or not. There is a balance sheet, there is an income statement, profit and loss statement, etc., through which we have a way to determine if there is a profit and loss. Now, what AAOIFI is saying that this is also good enough to consider there is a profit, and we can distribute based on that as well. Now, after we determine the profit, should we put into an escrow or not? I think that depends. If it's a trust-based structure, let's say it's a trust fund or something like that, even for example, crowdfunding, what I have seen in Malaysian regulations, and even Indonesia, I think many other countries as well, they will impose to have an escrow in between. So the funders put the fund, it will be held on escrow. There is a crowdfunding company, but they cannot touch the fund. The fund will automatically flow in to the destination company if the conditions are met. On the other hand, once the profit is realized, that company will give the profit and it will again not be touched by the crowdfunding operator company. It will be in the escrow. And from the escrow, based on the instructions that are approved by the regulator, it will flow to the investors. So that escrow is in place in many fintechs by several regulators I have seen. But it is not a necessary component, meaning that it's not that without it we cannot have Sharia compliant profit. It's not that. It is for additional governance and ensuring that the distribution is corruption free. There is no issues in between. Okay, I think I will just go to some of the examples. So I was mentioning that in today's case, we can apply the equity-based contracts in many contexts. So I will start with the VC. See, one of my professors, Professor Murat Sizaka from Turkey, he calls himself as an economist historian. He calls himself as an economist as well as a historian. So what he says, he has papers on that, is that as well, that the concept of mudaraba from the Muslims in Spain, it actually was borrowed or rather taken to the Europe, and initially it was known as commenda. And then commenda evolved and became venture capital. That's the long story in short. So in the venture capital, we have the essence of mudaraba and musharaka. We have the LPs or the limited partners. They are basically the fund providers or the sleeping partners in my previous example. We have the general partner, which is basically the venture capital firm. They are not the working partner. They are basically managing this funds together to put into another destination. We can consider this working partner for this part only. So if this is a partnership, here the LPs are a sleeping partner and the VC or the venture capital firm is the working partner. So based on that, they get the fund, which is the venture capital fund, which is a limited partnership usually, or based on the regulations, like in Malaysia, we have separate venture capital firm registration as well. And then this fund will be further invested into different companies, maybe startups, maybe different, you mentioned like different companies that you also invest, right? So the structure here would be basically musharaka. So we don't need to talk about profit sharing ratio here because it will be stocks. So once they give the fund, they will usually have some unit of stocks, or it may not be stocks as well, depends on the structure that we have. If there is no stocks, then definitely we will have to determine the profit sharing ratio, et cetera, et cetera. Now between the company and the fund, it can be different structures. It can be musharaka again, meaning that they will invest into equities. It can be debt-based instruments as well. For example, the fund is financing the company to purchase a machine, right? Based on murabaha. Murabaha is a profit based or profit markup based sale contract. Or it can also do an ijara. Today there was a presentation on ijara. On lease, right? Sheikh Yusuf, I think he was discussing about the lease. So the fund can flow based on different contracts, but we can have a musharaka here as well. But I try to give the context that usually here it's musharaka, and usually the VCs take some equities as well. That's how they invest. So usually it will be musharaka here as well. So that's one example of modern musharaka we can see. Mutual fund, for example. Here we have the funders, the investors. They put their fund together in a fund, and we have the fund manager, which is managing the fund. So between the investors themselves, it's a musharaka. They are partners. They are shareholders. The fund manager may act as a mudarib, meaning they will only get a share of the profit, as we discussed, or there is another structure usually a lot of fund manager will have, which is known as wakala. Wakala means agency. I had this in my slide, but I skipped due to time. So what is the difference between agency and partnership? In partnership, you get portion of profit. But in agency, you get a fixed fee. Usually, fund manager will charge a certain percentage of AUM, asset under management. Let's say the total fund is $1 million. So maybe they will charge 1% of $1 million, which is how much? $100,000. So, or maybe less than that. Huh? Not 100,000. I was trying to test, so I can understand everyone. All right, okay. So $10,000, and usually they will have that fixed fee, and they will also have an incentive from the profit, maybe X percentage of profit. Usually there will be a combination of two, or at least the first one. So that one is known as wakala or agency. So we can have an agency between them, or we can have a musharaka mudaraba structure here. Now, after we get the fund, this fund is now further invested into different types of securities. Securities, yani investment instruments. We may have stocks, we may have, usually people will put into bonds, or maybe some bank deposits as well, etc., etc. So again, musharaka mudaraba plays a big role in this part. Equity crowdfunding, yes.
For the previous example, can we have all of them combined, like the wakala with mudaraba with musharaka?
How?
No, I'm just asking.
So there is one way to combine, which I already explained. So they have a basic fee, let's say not 1%, let's say 0.5%. And then they have a share in the profit, if any. Meaning if there is a profit, they have a share of profit. So that kind of, we don't call it a combination, that is still within the scope of wakala, but it has the feature of partnership because it shares the profit as well.
But still a wakala.
Still, we will still call it wakala. Yeah. Okay, so we can do the same in equity crowdfunding. My company was involved to advise equity crowdfunding in Malaysia. So, and that was based on musharaka. So we have the investors as a crowd, they come as a crowd, like maybe 50 investors, 40 investors coming together, putting 1 million ringgit through the equity crowdfunding platform. And equity crowdfunding platform doesn't act like a fund manager. It is just pulling the funds. Sister mentioned about the escrow, so fund will stay in escrow. The escrow will be somewhere here. And then the fund will go to the startup, and in exchange, they will have shares. The investors will have some shares. And this is an example of how we apply musharaka in the context of equity crowdfunding. There is a bit of structure. I will skip that. In the context of North America, for example, I think when we talk about Islamic finance in the North America, I hear about two things mainly. The first one is house financing. The second one is the social finance, what we discussed for the last 2 days. So if we talk about house financing, here also we have a part of musharaka, but this musharaka is not for profit. See, musharaka has two dimensions. One dimension is for profit, which I have discussed so far. The other dimension is co-ownership. Not necessarily making profit, but owning together, joint ownership or co-ownership. The diminishing musharaka that we see in the North America or other parts of the world uses that second dimension, meaning the funder and the homeowner, they co-own the property in the beginning. So in this case, for example, the homeowner owns, let's say 75%, the funder owns 25%. So they own the house jointly in the first phase. Now, after owning the house jointly, the homeowner needs to stay in the home because this is his end objective. He would like to stay at the home. Now, how would he enjoy the 25% or 75%, whatever, which is owned by the funder? And that's where the rental comes in. So this musharaka is combined with ijara as well, rental or lease as well. So here we will see that the homeowner pays rent to the bank or the funder for the 75%, meaning the 75% that the funder has contributed. So usually in this structure, we have musharaka, a joint ownership, plus ijara, the rental or the lease. And why we call it diminishing? Because the ownership diminishes over time. So every month, the house owner or the home owner pays an installment. That installment has two components. One, the rent, as I mentioned. Second, part of capital. So with that capital every month, he will have an increase in his ownership ratio. And the increase of his ownership means diminish of the ownership of the funder. So that's why we call it a diminishing musharaka or musharaka mutanaqisa in Arabic. After some time, at the end, the owner will get 100% ownership, maybe through a sale contract, maybe through a hiba. So depending on the different models, I think guidance, they have sale contract most probably, as I have seen. So usually they will do a sale contract, maybe a lump sum amount, and maybe the last installment they will put as a price, and they will say it's a sale. So the funder is selling the 75% to the other party, meaning the homeowner. And that's how it ends. So again, we have musharaka here as well.
So,
Yes.
I have a question regarding that.
Yep.
So based on that, so this type of contract is halal, right?
It is, yeah.
It is, right? Because I have a question just to understand.
Yeah.
So is it allowed to have two contracts in one entity?
So, yeah.
Why? I'm just again. So what in the case that I have 20%, I own 20%, and the funder owns 75%? So what if any type of destruction happened in the house, as example? Who owns?
Who bears the liability? Yeah. So AAOIFI has clear standards on that. First and foremost, the musharaka standard has a section on diminishing musharaka, which gives the overall principles. Secondly, there is a separate ijara standard as well, which gives the perspective and principles of the lease part or the rent part. And then there is another standard known as al-jam'u bayn al-uqud, combination of contracts, which gives the principles and regulations on how do we have multiple contracts without having the issue of bay'atayn fi bay'ain, for example, meaning two sale in one sale, two contracts in one. So if we look at these three contracts, I will just summarize. First and foremost, all the contracts must be separate. Rental agreement is separate, the joint ownership is separate, the sale agreement at the end is separate. Every agreement is separate. What we mean by separate is that the roles and responsibilities under each contract will be separate as well. So if I'm a homeowner, as a joint owner, I have certain obligations and responsibilities as an owner. But then when I am leasing, when I'm a tenant, I have certain obligations as a tenant as well. So in the case that you mentioned, let's say there is a damage. So as per ijara contract, the periodic maintenance must be borne by the tenant. But if there is a fundamental destruction, damage or fundamental destruction is defined as something that if that happens, you cannot use that asset anymore. Let's say in case of a house, the roof is broken. Okay, so the water facility is no longer working, for example. So that means we cannot use the house anymore. So all these fundamental damages should be borne by the owner. Now in this case, if the homeowner is using the asset, periodic maintenance, anything, let's say a tap is broken or maybe a light is broken or whatever, he has to bear the expense. But if there is a fundamental destruction or he has to pay some insurance fees for the house, this should be split according to the ownership ratio. But this is what is missing usually in the structures. All the costs are being transferred to the homeowner. And of course, there are some rationale behind that as well. I'm not going to argue on that at this platform. But what I'm trying to say is that there are standards. The scholars have approved, but there are certain principles that you have to follow.
But that usually doesn't happen.
Okay, that's a whole long discussion again.
I know, because without mentioning the name of the company,
Yeah.
I know like their practice.
No, actually, I just want to share one thing which Sheikh Yusuf Sultan today he mentioned, and I also experience the same when I sit in different Sharia committees. You see, sometimes we are very right when we look at only from Sharia perspective, but when you want to implement it, you have to see that there are implications in terms of tax, implications in terms of legal, these and that, a lot of other things. So when you have all the perspectives, then you will see that sometimes we have to be a bit lenient from Sharia perspective. So since we don't know the whole picture, at least myself, I don't know the whole picture in the context of USA, so I cannot comment based on what the scholars have approved. I think brother has raised the hand first. Yeah, yes, brother.
It's a comment on this.
Oh, okay. Then you can go ahead first, yeah.
Yeah, just only for awareness, in the US, we have both types of community. Some of the companies, they will not share in insurance, property tax, major repairs, and profit and loss. Some of the companies, etc., they will share in property tax, insurance, major repairs, and profit and loss. So,
Oh, mashallah. There are both existing, mashallah.
in the US, and each of those companies have different types of challenges. So it's not that one answer fits all solutions.
Right.
You have to respect the Sharia boards of all of these companies.
Right.
Both of those types of solutions come to existence.
Right. The best way is if you have a discussion with the Sharia board members, maybe they can give some insights. Yeah. Brother.
Since this is a musharaka, if there's profit, is that predetermined at the beginning of the contract, or is that decided?
Remember, I mentioned that musharaka today, we mean two types of musharaka. One is sharikat al-aqd, or the partnership that is meant for profit. That was the first type that I have been discussing all the way. This is a sharikatul mulk. This is just a partnership in the asset, meaning it's a joint ownership. Profit is not a motive.
What if the homeowner sells?
Huh?
What if the homeowner sells?
Yeah, with the homeowner. But if let's say this home is sold to some other party, there is a profit, then it will follow the ownership ratio. So in this case, let's say 75% funded by the funder, so he will get 75% of the profit, if any. You know, sometimes it happens that the homeowner cannot pay the 25%, so he has no other choice but to give the consent so that it can be sold to a third party. So usually in terms of foreclosure, in conventional banks, what we see, they will get everything, even if there is a profit. But according to musharaka, because it's a joint ownership, if there is any profit, it must be distributed according to the ownership ratio. We cannot just confiscate the entire profit and give to the funder. That is not Sharia compliant.
I'm sorry for asking that much, but I have a question again regarding that. So in a case that the practice here is that you pay as owning 25% and leasing 75%, and you pay in a way to own at the end, right? So me paying rent, is it going to be the same amount of the rent that I pay, even though I could maybe own more now in the future, as maybe I owned in the past 25, but after paying for couple years, now I own 50%, but I'm still paying the same amount of rent, which means that I'm paying for something that I own.
True, but the thing is, the main concept of diminishing musharaka was designed in a way that with every installment, the ownership ratio changes and diminishes, right, for one party. But in practice, what I have seen in many jurisdictions, they don't do diminishing by every installment. So because of this, the rent and the ownership component are taken into consideration together and amortized for the entire period, let's say 20 years or 10 years, with maybe a flat rate or variable rate installments. So you won't see significant changes in the installments. But behind the scene, behind the calculation, that's the basis. So to answer your question, because the ownership is actually not reflecting, the changes in ownership are not yet reflecting. It will only reflect at the contract at the end, maybe a sale contract or hiba. So because the ownership is not changing at this moment, so even if they call rent, it's still valid from Sharia point of view. And if it would have changed, what would they have done is that they would decrease the rent, but the capital portion would have still be a sizable portion. So you would still have the same installment, even if you had diminished. I hope that makes some sense, because I don't have the Excel sheet of amortization, but if you just search for amortization, how it works, you can see videos in YouTube and you will understand what I'm trying to say. Yes, sister?
I was curious more towards the room, since you acknowledged that you're not familiar with exactly the different processes here in the US. So is this another issue that we have to pay attention to? The one already mentioned was the not sharing, damages or property taxes and these things from between the funder and homeowner. I know frequently some of the companies will immediately turn around after the sale and like either sell it to a third party or sell it to our like Fannie Mae, Freddie Mac type, ownership things where it just immediately goes to somebody else. If they make a profit from that, is it common right now that they're also not sharing that with the homeowners, the tenants, even at a smaller ratio, or is that something that is that dealt with, or is that an issue that we're supposed to be aware of?
The expenses, immediate expenses, you mean?
Not the expenses, whatever profit that the funder would potentially receive from offloading this, the 75% ownership, if they immediately turn around and sell that 75%.
If they're selling their ownership, then it belongs to them. They don't have to distribute. What I meant earlier is that if they're selling the entire property to a third party, so in that case, each party will receive the proportionate profit for their portion. But if they're offloading their portion, then they enjoy the upside of that. They don't have to distribute because it's their ownership. Does it make sense?
I mean, yes, but I feel like why is that fair? Because if they say, I have 75% of this, I just obtained that 75% from somebody for whatever, 60 grand, and then I turn around, you're living in it now, you're paying me 25% of that over a schedule, but I immediately know I can get 90 grand for the same thing, and I'm just gonna pocket 30 grand to myself.
The justification, yeah.
They don't get that 25%.
I mean, if I understand correctly, in my own words, what the scenario that you are saying is that, let's say they have the 75%, they put money for that, but immediately after the ownership, whatever, they sell it to another party, right? And they make a profit. So your argument is why it is not shared, because the homeowner potentially is losing, right? Because they didn't make that profit wherever there was a potential of profit. My response would be, first of all, they took the risk. I mean, the moment they became owner, they took a risk, and for that risk, it is justified if they make a profit. Just like if I buy something, I take into my possession, and after that I sell, I make a high profit, no issue. Sharia doesn't put a cap on profit, unless that profit is made through abusing someone in a dire situation and making benefit of that situation. That's a different thing. But otherwise, he sold his portion. He made a profit, so it's his profit. If the homeowner wants to sell as well, they can also find a buyer, and I mean, unless it is not restricted by the agreement, they can do so as well. And one more disclaimer, actually, I mentioned I don't know about the US market, but just to share, last year when I came to NACIF, our paper was on the house financing schemes in US. And we interviewed almost all the Sharia committees of different funds. We visited guidance, we interviewed UIF as well. And so I'm quite familiar, but as a matter of adab, I don't want to comment on the things. All right, okay, yes. Yes, please.
Again, can we go back to that?
Yes.
So back to real world situations. So part of what I'm struggling with is you're determining upfront what the value of that property will be at some point in the future to have a diminishing balance off of that. That's not real world, because a house will appreciate an indeterminate amount
Right.
over a period of time. So how do you address that real world situation?
So that's one side of the story. On the other side, if we look from the context, like background, why this product came into picture. This product came into picture into the conventional, lease to own or that type of structures that has been existing for house financing for a long time, So as an alternative to that, scholars have come up with a structure that is close to that. However, it's not the very idealistic, definitely. Like if you really want to reflect the true ownership, definitely it will reflect the price appreciation, or even if there is a depreciation as well, so the upside or the downside. But if we have to take care of these things, then it will not be in par with the conventional product. So remember, many of the products that we have today are brought into the market as an alternative to the conventional products. Now, if we want to move from here to the very idealistic Islamic finance, then it requires a lot of, long journey of awareness and, collaboration between the industry as well as Sharia scholars. It's a long journey. We are not yet have onboarded everyone onto this structure. That is even far. Yes.
Just to add to that, some companies do reassess on an annual basis the value of the property, and they adjust as you're buying your shares. They will adjust for that up or down with the appreciation or depreciation. So again, not all of the companies do this, but some of them do it. So it does exist.
So if you increase the value, on the other side, the customer is impacted. Meaning the homeowner is impacted, because what it means is that now you have to pay higher installment. So that is also another thing pros and cons, yeah. So that's why I said, if we want to move towards that, we have to, like for example, in some countries, like last time I remember for Australia, when the federal bank, the central bank was increasing the interest rate, immediately the rentals go up. So they linked it at par with the interest rates set up by the central bank. So just like that, if you want to incorporate the value appreciation of the house, what it means? It means immediately that the homeowner has to pay extra. So that is also another flip side we have to think about it, how fair it would be, or how just it would be. Okay, gentlemen, I think we said we will keep it elastic, but it has been, I said if the demand is there, it will keep extending, alhamdulillah. So I will conclude almost, inshallah. Sorry, I was navigating the other way. Okay, my last part, you see, when we talk about musharaka, one of the most modern application is stock companies, limited liability companies or stock companies. Now, issuing stocks for a company which is Sharia compliant, we don't have any issue. AAOIFI has also mentioned that. But when it comes to investing into other companies' stocks, this is where we have to be careful on ensuring Sharia compliance. And mashallah, today there are so many Sharia screening providers, even in the US market. But just to give you somebody who don't have any idea of how it works, on the broad level, we have 2 levels of screening for any stocks before we want to invest in. The first one is we call business activity screening. This is where we basically try to screen the main business activity of the company. Here we want to ensure that it does not fall into any of the sectors, for example, conventional financial services like banks, insurance, etc., alcohol, pork, gambling, casinos, lotteries, media and entertainment, adult entertainment, tobacco, and there are also some screening providers. They also exclude weapons. They also exclude hotels, like Malaysian Securities Commission, they exclude hotels. So there are some bigger list as well, right?
Drugs as well.
Drugs as well. So all these things, basically all the haram or non-compliant, this will be the first level of screening. Drugs actually is included here, brother, under alcohol, basically. The second level of screening is financial screening. Here we want to see 2 things. Number one, okay, we understand that the main business activity is Sharia compliant. What if they have some income from interest? Usually all the big corporates, they will have some funds put into interest-bearing deposits, or maybe some Federal Reserve bonds and securities, this and that. So from which they will have some interest income adding to their balance sheet. How do we treat that? Do we say that, okay, because they have some interest income, we cannot invest? So if we look at the International Islamic Fiqh Academy resolution as well as AAOIFI Shariah standards, they have quantified it that the non-halal income should not exceed 5% of total income. What it means, let's say the company has a revenue of $100,000. We are talking about income here, revenues, not profit. So let's say they have $100,000 revenue, and the total amount they received from interest is $4,500, which is 4.5%. It means that we can still invest into this stock. But if it is $5,000 and above, meaning more than 5%, then we cannot invest. We consider it as Sharia non-compliant. Why is 5%? What is the rationale behind 5%? Many would ask us this question. Does it mean that 5% became halal? No. 5% still remains as haram. However, because 5% is very insignificant according to our urf, according to the urf al-tujjar, the customs of the business people, this is considered as very insignificant. That's why scholars allow it based on some principles. Because today it is very difficult to find any company. Think about all the big companies, any company which has no interest income at all. It's very difficult to find, almost not existing, even in Muslim countries, unfortunately. So what will we do with the 5%? We will purify it. How we purify it? So let's say I mentioned 4.5%. Now after we receive dividends, let's say I receive dividends of $100, I will extract 4.5% of that $100 and give it to charity. So, which means $4.5 I will take it out, give to charity. As simple as that. So that's what we mean by purification or tathhir. And AAOIFI has a clause on that as well.
Is that 4.5%?
I mentioned in my example it was 4.5. So because we are not allowing 5% and above. So it must be below 5, and whatever it is, we have to just give it. Yes, sister.
Just remember hadith regarding that. Rasulullah said, يأتين على الناس زمان
لا يبالي المرء بما أخذ المال. Okay.
يأكل الناس فيه الربا شاءوا أم أبوا فإن لم يفعلوا أصابهم غبار.
لا حول ولا قوة إلا بالله.
Just to translate the meaning of the hadith, Rasulullah said that a time would come that people would deal with the riba, whether they accept or not. Even if they didn't, their dust will just like them. Or
Unfortunate but true. Yes, sister.
Okay. So with the example you gave about dividends, why did you choose 4.5% instead of 5? Is it because you learn, like say only 4.5% is haram? Is that why you used that instead of
No. The amount is mentioned is 5%.
Right.
So if it is 5%, we consider it is non-compliant. It must be below 5%.
It could have been 3.
So I gave the example of 4.5 as a random number, random percent, but the idea is to have it be below 5%.
So if it's 5 or above, you should not.
Yeah, we consider it is non-compliant according to the AAOIFI Shariah standards, basically. Yes, brother.
I noticed you're using dividend tathhir instead of AAOIFI. Do you prefer the dividend method over the AAOIFI method? Because AAOIFI talks about calculating as a percentage of your holdings.
Okay, yeah, very good question. So AAOIFI mentions the income that is the based on the holdings. Now, when do you purify? AAOIFI is silent on that. When do you actually purify? So AAOIFI mentions the calculation how you purify, but when actually you purify? This is where AAOIFI is silent, as per I remember, right? Right. So if we look at the practice of indexes or international, Sharia compliant funds, I also sit into some Sharia committees of some funds. Usually the tathhir happens when we know how much to do tathhir. And that happens at the end of a financial year, coupled with dividends. You get the point? So usually at the end of the financial year, they will calculate whatever audited, dividend distributed. So it all comes together. So that's why I gave the example of dividend. And also, this is one perspective. Another perspective also, because if you don't receive anything, so the income generated is still in a gray area, meaning it's still a bit uncertain. I didn't receive yet. Today I see there is a profit, tomorrow it may be a loss. With dividend, it is sealed. So once we receive the dividend, it's easier now to calculate the portion I have to give to charity. That's why I gave the example of dividend.
The other question I had was the 3 ratios. The second one has been dropped by many indices. So Dow Jones dropped that one, FTSE dropped that one. AAOIFI is still carrying.
This one?
The second one of the cash interest earning cash deposits.
Okay.
Should not exceed thuluth. Many of the indices have started to drop this one. Like Dow Jones is one.
Are you sure you are referring to this one or the debt one? There is another ratio of debt.
That was dropped longer ago.
Yeah.
Yeah. Last year they dropped.
This one I'm not sure, because even in SC Malaysia we still hold this one.
Yes.
Oh, okay.
I'm just curious what your thoughts were, because AAOIFI is still holding on to it, Malaysia is still holding on to it, but Dow Jones and FTSE dropped it. I was wondering if you had any thoughts on that.
Actually, you see the implication. This 30% is just a bar so that we show that we are not supporting interest-bearing deposits or borrowing. That's the reason. But otherwise, with this 30%, even if it goes to 60%, nothing is added to the income right yet, because we are still taking care of the income, non-halal income. So there can be argued that we don't need the ratio, but I am still in favor of this because this still is a relaxation. As Muslims, we should not be supporting any interest-bearing activity. We are still saying, okay, until 30% is fine. Now, if we say we don't need even this 30%, I think that's like a broad level support for interest-bearing initiatives. So I'm still in favor of this, and as I mentioned, AAOIFI holds this, and SC Malaysia also holds it. You mentioned, did you mention S&P, Dow Jones? They dropped it?
S&P,
Okay.
Is the liquidity that was?
No, the debt part AAOIFI dropped. Yeah, the debt.
Liquidity was dropped.
Yeah.
they also dropped the second, Dow Jones dropped the second one, and it was.
Because I was looking into Dow Jones just earlier this year, I remember, but I didn't notice that. Okay, all right. Because I saw they mentioned clearly Dow Jones has an interesting, had an interesting difference from other AAOIFI and etc. Earlier, what they did is this 5% of non-halal was excluding interest income. I don't know why they had this, but they had like the meaning that if you have interest income more than 5%, still it would not have been counted here. That's what their methodology was.
Which means like you are putting your money in 3.3% in haram income. If you, exceeded the 30%.
Still, that would not have been in the ratio. I mean, they would, let's say if you have more than 5% interest income, it would not reflect here.
I just meant as like one individual will be participating in by himself or herself in more than 4%.
Maybe, yeah, maybe. But they changed it last year. They changed it last year, and now it is this ratio includes interest income as well. You can see the log. They mentioned that they have updated it, and then now this includes the interest income as well. Okay, so the thing is, this is the overall guidance, but now there are many providers who take these based on data-driven, technology-based, and they will just provide you with the list of stocks which complies with this, as well as the purification ratio, the amount you have to purify. So all these are taken care of by the screening providers, mashallah, the indexes, Sharia compliant indexes, so we don't need to worry about. The last slide, Musharaka is also applied on Sukuk, and I don't think I have time to explain it today, but I just wanted to give the broad level idea that today we can apply Musharaka and Mudaraba in so many different contexts. In our private partnerships, in capital market instruments, in funds, in Sukuk, even in our house financing, equity crowdfunding, and many, many more. So if you want to truly realize the beauty of Islamic finance through risk-sharing concepts, this is the concept. And I wanted to just share as a refresher of AAOIFI Shariah standards, what are the basic principles are, and I give a glimpse of what are the different applications we can have today. And I hope that with that we have a bit of overall overview. And I will just end with a thought that you see whatever instrument you are doing or you are structuring or you are advising, please make sure that there is a proper Sharia governance in that. And I think Sheikh Yusuf today, he was also mentioning about the lack of Sharia governance today in several structures or projects in the US market. And what we mean by Sharia governance today, I just want to give this slide so that you know what is happening in other parts of the world. In the other parts of the world, we already advanced almost into the fourth line of defense. The first line of defense is basically the Sharia Secretariat, the Sharia Committee, the Sharia Board. In US market and in the North American market, I have seen some products or projects, they don't even have this one. Meaning they say we comply with AAOIFI, they have a big logo of AAOIFI there, but if you want to find who is the Sharia board member, there is none. They just, they don't have even this fast line of defense. But in other parts of the world, from the first line, we have even the second line. So we have the Sharia board, we have the internal Sharia review and Sharia risk management to support the Sharia board. Even though this is in the banks, on insurance companies, but we have similar functions in capital market instruments as well. So it's not only the Sharia committee, one of approval given, but there is an ongoing supervision as well. And the third line of defense in Sharia governance is basically Sharia audit, the external Sharia audit. Just like you have external financial audit at the end of the financial year, there is external Sharia, sorry, this is internal Sharia audit, not external, sorry. So you have internal Sharia audit department to do a yearly or annual audit. And the fourth line of defense is the external Sharia audit, which Bahrain, UAE, and some other countries have already made it compulsory, and some has just recently considered it recommended. So with these lines of defense, we ensure that the compliance, Sharia compliance is taken care of properly. If you don't even have a Sharia board, then how are we assured that this product is Sharia compliant? There is always a conflict of interest. The business, the management will always try to drive the business, regardless of compliance or not. That's a natural tendency. So there must be another, supervision to ensure, or at least to advise that this is Sharia compliant. And that should not be one-off. There must be an ongoing component as well, so that it remains compliant not only at the inception but throughout the tenure. I know many of our clients, they don't like us because when we put the ongoing Sharia compliance requirement, they say we don't want it. Sorry, and we have lost many clients, unfortunately, in the North America as well. So anyway, that's the progress that we have made in other parts of the world. And at least I would suggest, strongly recommend, if you are investing, if you're structuring, at least you should have the first line of defense, which is the Sharia committee, Sharia board, supported by the management. Yes.
It's a totally unrelated question, kind of a broad question, but what do you see for America as far as Sharia finance, and with the restrictions and the freedoms that we have? Do you actually see it being very prosperous, even more so than other current model countries?
I would say a lot of potentials are there. As Sheikh Yusuf was mentioning, it could be one of the biggest markets because you have so many funds. Even the Middle East and other funds, they will invest into Apple, Google, and all these companies that are in US. But sadly, I didn't see much stronger initiatives in the communities yet. If I want to compare with halal food, for example.
Yes.
Right. So yes, I think it was sister. Yeah.
Oh, okay. I wanted to ask, so as a new entrepreneur, I'm looking also to help fund like business startup creations. I'm wondering if there's enough support in the Muslim community. Like for non-Muslims, they use business credit, and credit cards have so many lines of interest, all that. I didn't find much like halal loans when I'm trying to search. Where it's like low risk in order to really launch your business, but receive help. Do you have any recommendation or direction?
When it comes to alternatives to conventional loan, if you are talking about a business, giving a finance to a business, definitely we can try the Musharaka Mudaraba structure, but that also has some pros and cons which we need to fine tune it. We have tried to apply this in Indonesia, and of course a lot of lessons learned we can share in a separate discussion, inshallah. We can also do some sale-based transactions, like let's say if you want to give fund to the business, definitely they would like to purchase some inventories or machines, whatever. So you can fund these or finance these through sale-based transactions. That is a bit more secured because after the sale immediately it becomes a debt, and debt is secured compared to partnership contracts. When it comes to personal finance, the alternative to credit card, this is very challenging because whenever there is no asset involved, usually we are left with qard. Qard means just loan, and we cannot get interest or any addition to qard. In Malaysia and that part of the world, they will use tawarruk. Tawarruk is also known as commodity murabaha, where a number of sale transactions are done in the background, and within few seconds you get the cash. That is disputed highly by scholars in the Middle East and other parts of the world. So I don't recommend that. But if it is for business, usually there will be a solution in one way or another. Yes, sister.
There's three main takeaways. My question is general. Three of the things that stood out to me, especially as someone very new to this, is that one was the wisdom in just setting out a contract from the beginning, as you mentioned several times, like the prevention of disputes. The second thing was when you shared about the additional meaning behind that being a long-term obligation, not just debt. And the third thing, the other consideration, which was acknowledging that there's a difference in partnerships when it's a person-to-person versus companies, and maybe you're dealing with shares. My question from that is how, or maybe there's additional consulting services, or it maybe, I'm asking about whether those exist already outside of AOIFI directly, as well as initiatives to bring that importance into talks more regularly, for instance, at Masajid or at other conferences, because my personal experience with is through my spouse and a bunch of brothers who have, mashallah, various businesses. It's like that, I think, is not always thought of and is not communicated about how important it is to set up that contract from the beginning. And I've seen it go positively and negatively, both ways, and where that offense or that hurts later on, even though things start off great, does come out, when you don't have that contract. So what either consulting services or initiatives exist, or do you think should exist? How should we be communicating this importance of contracts from the beginning for all of our, brothers and sisters who are starting new companies? And it's very kind of, okay, we'll just start because we need to for survival and these things.
I think that's the reason I chose to travel 30 hours to come here and meet all of you and wait until this end of these days today. We have shared advisory company where we provide this consultancy. We provide basically all these three functions, 3 lines of defense mentioned in the Sharia governance. We also do training. We do remote training. We do offline training. In the beginning, I was mentioning our experience in the training. I think if you just joined after that, just to quickly show that the different types of entities that we have been training, from regulatory bodies like the Ministry of Finance in Indonesia, Central Bank Yemen, Ministry of Finance Afghanistan, and then universities, AAOIFI, CIBAFI, ISDB, alhamdulillah, various, even the ulama like Darul Uloom New York and in Bangladesh as well. So with that diverse experience, we have been always trying to create that awareness, provide the consultancy. Basically, when we do the Sharia consultancy, it's not like a fatwa that we just say yes or no. A consultancy means that we handhold so that you can achieve your goal in a Sharia compliant manner. For example, somebody is craving to eat a chicken fry or fried chicken. So he has an option in front of him which is not halal. So we'll handhold to him and say, okay, why not you get a halal chicken fry? There's a, it just exists in the next door. So for us, in our experience, we found in most cases there is a way to do it in a Sharia compliant manner. So we try to understand what you want to achieve, and then we advise accordingly. And at the end, we certify or we give a resolution or pronouncement accordingly. So I think we can definitely collaborate, inshallah, and we will be happy to do that. So I will end my slides with one interesting announcement I wanted to give in the conference, but I chose to do here. And I'm happy to, okay, there was an ethics part as well. I don't have time to cover. I think you were mentioning about ethics, so I included that right sitting beside you, because AAOIFI has a separate Sharia standard on, standard on code of ethics. So I just brought one slide, inshallah, very comprehensive. It's a one of its kind in the whole world, because it incorporates the Sharia values of amana, etc., and puts into the real world ethical conduct. So when you mentioned that question, I was thinking and I just added. So this is the last thing I wanted to share. When I came last year here at NACIF, and I traveled to New York, New Jersey, and also Houston, Dallas, and went to several masajid, mingled with the community, I basically found 10 questions everyone is asking about. So the questions that you have asked actually falls under these 10 questions. So today I wanted to share that, alhamdulillah, we published a book just before we came. So this is the QR to find, and I have few physical copies. And I would like to prefer those who are basically in the US so that I can share with you, inshallah. The rest you can also find in our website. And the website is also, as I mentioned about the advisory, the website is, when you click, go to here, you find our website as well. So I would like to just share some copies. Yeah?
I can hand them out if you want.
Oh, okay, yeah. I think I don't have enough for everyone, but maybe just a few, yeah.
I'm going to go in order.
Can I make a comment to, can I interrupt?
Yes.
So there are increasing options for Muslim entrepreneurs that address some of the things that you were talking about.
Did they give you?
It doesn't take a
Brother.
It's a complex.
Oh, okay.
So there are, I've seen Sharia compliant venture studios that support Muslim entrepreneurs, because no one knows everything, right? So the venture studios are supposed to support the entrepreneurs who have ideas but don't know everything else.
Right.
So they bring in these other things along these lines. Again, they don't take a place of this, but they facilitate this because other people don't know.
Right.
There are also increasing Muslim lawyers who do partnership agreements and so forth, but understand Sharia principles and incorporate that within the partnership agreements, and they serve as that first line of defense, because they can't. I mean, again, it doesn't take the place of folks, but it's helpful to have a resident, like U.S. lawyer, but who also understands Sharia law.
Yeah.
So there's different pieces out there, but again, most people don't know.
Exactly.
It is increasingly available.
Yeah,
There's
inshallah.
also access to like Muslim investors network,
Yes.
where like, that's what I need access to.
We'll talk.
Yeah, really. Okay, with that, I would like to finish the session and thank you so much. Please visit our website, adaladvisory.co, and also would be happy to connect you over LinkedIn. You can just search me as Yousuf Sultan. Thank you so much. Please remember your dua. Jazakumullah khairan. Thank you. Assalamu alaikum wa rahmatullah.
Do you teach